Good morning. Today is December 27th, the day after Boxing Day. The time right now is 5 minutes to 10 in the morning. And market was very subdued overnight because most money centers remain closed for the Boxing Day holiday. We can see overnight we do have a little bit of activity, but not very much. You can see in the cash index in the Dow Jones, we can see the market is still flirting with the year's high. In fact, this is flirting with the all-time high. We can see last week the market took out the all-time high. Previously was 36,952.65 to a new high at 37,641.3. But so far we can see that this week has been a shortened week. We can see that yesterday there was no breach of the most recent high at 37,641.3. But however, the market momentum suggests that we may be looking at fresh all-time high going into the remaining 3 trading days for the 2023. But what my concern is how this market closes by the end of Friday. And that could be very telling if the market closes weak, especially closes below the week's low, or worse, below the last week's opening, then that will mean that we could be seeing a temporary top in place, perhaps even a total reversal. So do watch out for the closing on Friday. And in the S&P 500, while the Dow Jones has traded to an all-time high, the S&P 500 cash index has yet to register all-time high. The all-time high remains at last January, the 4th high at 4,818.62. So from the week's high, so far, yesterday's high was 4,784.72. We are about less than 34 points away from taking out the all-time high at 4,818.62. We remains to be seen whether it can do that. I think the momentum should be able to carry it forward to register all-time highs. How they close, like I said earlier on, is going to be crucial in my opinion, as it may set the tone going into 2024. And in the Nasdaq 100 in the cash market, you can see that market continued to edge higher into fresh all-time high yesterday at 16,907.51. Now remember, the last high was traded on November 22nd, 2021. The level is 16,764.86. So we are marginally above that level. Again, if it closes below this level, and for worst case, if the market closes below the week's low, then we can see that the market could be telling us that market temporarily may has hit a top. Okay, so look out for how it closes for the next 3 days, especially on Friday's trading. And over in Asia, we can see the Nikkei it was very robust this morning. It's actually trading higher and is attempting to actually challenge the most recent high at 33,750. This morning high was 33,690, and it's getting very, very close. But so far, this rally from 32,090 has been a 3-wave affair. So whether the latest rally can actually take out the 33,750 is going to be crucial in my opinion. Failing to take out this level may cause the market to come back down again, especially if tonight's trading on Wall Street is going to be weak. Okay, and over in Hong Kong, we can see that there is a little bit of a buying interest. But what happened was the new ruling as far as online gaming is concerned, imposed by the federal government in China, is actually dampening buying of equities in the Chinese market. We can see that the market was actually was on the way up before it got slammed back down in late last week. We can see that there has been the result of the new ruling restricting how gamers can actually top up their account to actually buy means, or whether there are going to be avatars to play the game, has actually destroyed quite a bit of value in the 2 top gaming company to the tune of billions of dollars over the last few trading sessions. We can see that that has been the in my opinion, a self-goal, considering the market has been very, very weak, and the fact that the federal government has injected hundreds of billions of dollars to support the Chinese markets. Now it could actually undo that effort, because it apparently does suggest that the left hand doesn't know what the right hand is doing, and this is have detrimental effect on the sentiment in Chinese equity going into the rest of the year. So we can see that prices hit a bottom of 16,276 in the Hong Kong market before it started to rebound. But again, this rebound has been pretty weak so far. Do watch out for developments whether they walk back on the latest gaming rules in China. And over in the Dollar itself, we can see dollar actually lost more ground last night. We can see market is trading, hovering just above the 101 level, which is actually quite weak after a rally attempt last week. And we can see that has been undone, and prices are beginning to test the lower end. But be careful, because the market right now do not have the momentum, and they may be it is vulnerable to very sharp reversal. Do watch out as you are selling the dollar going into the remaining part of the year. In euro dollar, the euro actually traded to a marginal high at 110.45, but again, very similar to the dollar index. This market is very thin right now, and is very susceptible to a reversal trade. Over in the sterling, it remains the same. There is no testing of new high, unlike the euro dollar. We can see that the high traded in sterling is just under 128 even, and currently it's trading at 127.25 levels. So you can see that the top has been getting lower and lower, and the lower are getting lower and lower. So that suggests that possibly we could be seeing a top in place in the sterling versus the dollar, at least for the short term. However, this market has been supported by this rally here from all the way from 125. So again, there are contrasting views here. The rally here remains very much in place, although the recent price action has suggested that the market inability to take out new high could be in trouble. Okay, in dollar versus the yen, we can see very much like what we are seeing in the dollar index. The dollar is on the defensive, and dollar yen is currently trading at the lower end of 140, and we want to see how this market performs. Basically, I think top side is about 142.90 to 143.40 levels. Very limited upside potential with more risk to the downside. And over in the Aussie is the only one that continued to charge higher at 0.6968 30 levels as we are speaking this morning. But however, this area is going to be very interesting to watch, because there is an order block here at 0.6805 to 0.6847, and this level, unless it's taken up convincingly, may be capping further rise in the Aussie market. And in the dollar versus Canadian, this has been one-way street so far, worse than the dollar index. We can see dollar versus Canadian has been trading progressively lower, with the idea that it may be accelerating. The low traded this morning is 131.93. So let's see whether it will continue to trade lower, but I think it's quite vulnerable. Okay, and in the precious metals complex, we can see a mixed result last night. We have gold marginally edging higher, buoyant by the fact that the dollar is on the rope, and the high traded recently is $2,070.70. Upside potential, there is a possibility of market going up to test the $2,081 to $2,090 thereabout, and this will be the first challenge to see if we can sustain beyond this level, feeling which I think the market will unravel in the three-way pullback, possibly targeting the lower end at $1,885 to perhaps $1,864. Over in the silver market, silver closed marginally weaker compared to gold. Last night, we can see the market tested $24.05, but the market basically is trading sideways with a little bit of a bullish tilt, because the immediate support is probably around $23.93 to $24.10 level, which could be a base for the market to propel higher to test a $25.91 high. And over in oil, oil actually benefited from last night's trading activity because of the Red Sea tension, whereby Houthis rebels has been disrupting the traffic along the Red Sea, and this is causing commercial vessels to actually reroute to sail via the Horn of Africa, which is a much longer route to reach the Europe market. So this is having an impact on the transportation of oil as well as other commercial vehicles. We can see that prices has benefited from that because tension has been rising in the Red Sea area, because the US has actually gathered 20 countries to protect commercial vessels as they transit through the Red Sea from the Suez Canal. So we can see that's a choke point, and this is causing premium on commercial tankers as well as commercial vessels to actually spike. So eventually that surge in premium will eventually result in higher consumer prices in the months ahead. So this is supporting of oil prices. And last time we also hear that the US Petroleum Strategic Reserve has been replenished again. So we can see that those three factors One is the rising tension in the Red Sea because of the Houthis rebels capturing and targeting vessels going through the Red Sea. The other one is, of course, the gathering tension as a result of US gathering 20 of its allies to actually protect vessels. And the other one, of course, is the SPR replenishment of stock. And currently, we can see prices traded to a high of $76.14. Technically, this is already above the nearby resistance line, but this is also very, very interesting. If the market can close above $76.72, convincingly, the next target logically will be this high here at $79.56. So it remains to be seen whether it can actually go all the way to test the $79.56 level. I think it could, okay? And over in Bitcoin, we can see Bitcoin actually fall back in very quiet trading. The market traded high of 44,394, failing to take out the year's high at 44,715, and but the underlying tone is actually quite positive because from now until December 29th, okay, the SEC is asking all those applicants for spot BTC ETF license to resubmit the application, filling up a form to actually to amend the application, basically to make sure there is this cash component. How are they going to settle? And if those are accepted by the SEC, the deadline December 29 is supporting this market itself. So going forward, there's a good chance that the market may actually rally into 2024, or perhaps at the start of 2024, because the underlying tone is actually quite positive. On the downside, we can see that the low so far has been marginally higher than the rest. Of course, we are assuming that the low last night at 41,699 is the low, because the prices do seem to bounce back into the support line, and this could be actually seen to be higher lows. And if we have a higher lows and also accompanied by lower highs, we could be going into a contraction zone. This could see prices consolidate for a while before the market breaks out. And I think the breakout will likely to be favoring the upside rather than the downside from now. So in the meantime, you take care, and I'll come back to you tomorrow with further updates. Bye-bye. Take care.